The stock market continues to overreact to the possibilities of a future recession. Let's talk about it. Hello everybody, Joe Warby coming at you. And yet again, we have a situation where the stock market thinks that something may happen in the future and is selling off ahead of time before that event actually occurs. And the event I'm talking about is the possibility of a recession. And if this recession occurs, it is going to be 100% caused by Jerome Powell, the Fed chairman, because he is attempting to reduce inflation by raising rates historically high in an unprecedented level. We're talking about going from 0 to well over 4% in a very short period of time. And this is causing concerns that economic activity is going to slow down, that consumer spending is going to slow down, that the GDP is going to retract, and we're going to head into a recession. All of this is going to come to a head December 13th of next week. Now you'll notice I'm not in Pennsylvania and I'm not in Arizona. So throughout this video, see if you can figure out and comment down below which country you believe I'm currently in. See, December 13th is when we get our next inflation report. And that inflation report is extremely important because it's going to dictate what Powell does on December 14th, the next day when he has his next Fed meeting. Last month, inflation fell down to 7.7 from its previous high of 8.1, all the way back to when it was over 9%. And Powell believes that his interest rate increases are what's causing the drop in inflation. I disagree with that, and we'll cover that in a few minutes. But if Powell truly believes that he's brought inflation down, and if we see a report much lower than 7.7%, that means that he may only increase interest rates by 0.5%. And the markets have already priced that in. Over the last 4 days, we've seen the markets pull back on fears that he's going to increase rates a little bit higher and cause a deeper recession. And we really need to talk about what type of recession we will be seeing. You see, the problem I have with Powell is that he has way too much power, too much control. The idea that a recession can be brought upon by a single man, I don't think that should happen in the United States today. And he's not even an elected official. He's appointed by the president. And yes, there is a Fed committee, but he is the chairman of that committee and he has the most power. So simply because he feels that interest rates need to be driven up to reduce demand, to bring down this economy so it doesn't quote unquote burn itself out, I think that's just way too much power for anybody to have. And let me know your comments down below. Do you think the same thing? But first, let's define what a recession is. See, a recession is when you have back-to-back GDP quarters declining, like we saw in the first and second quarter of 2022. However, in the third quarter of 2022, we actually saw GDP increase dramatically. In the first quarter, it was negative 1.6, negative 0.6 in the second quarter, and it jumped up to 2.6 positive growth in the third quarter of 2022. So we would have to see some pretty big declines starting in the fourth quarter and maybe the first quarter of 2023. And then even though we have a pullback in GDP growth, we have to also see a slowdown in business investment and consumer spending. And then the National Bureau of Economic Research has to come in and actually declare it a recession. So if we have a recession, what is it going to look like? Well, it's not going to look like the recession of the 80s, and it's definitely not going to look like the recession back in 2008, 2009. What we will likely see is we'll see unemployment numbers go up to maybe 4.5%, 5%. We'll see economic activity slow, but it's not going to be massive 15% unemployment. It's not going to be stock markets falling another 30, 40%. The markets are still down. They've already fallen. And if we have a recession, it's not going to be a terrible one. You see, what we're really worried about is not that inflation is going to cause the recession. We know the recession is coming. It's that Powell is going to cause recession. And he's causing it by continually raising interest rates in order to stave off inflation. And inflation that was created because of the pandemic, inflation that was created because of the supply chain. And his act of raising interest rates is really not going to do anything to offset the inflation. The inflation is going to come down on its own because they judge inflation over a 12-month time period. And if you go back 12 months, we were in the middle of recovery from COVID, and we had massive supply issues. But because of the demand that had been pent up over the previous 12 months from COVID, that along with a limited supply caused massive inflation. Inflation that really should not have been judged because the world shut down the previous 12 months. So inflation is going to come down all on its own. Powell raising interest rates isn't reducing inflation. Inflation is going to reduce on its own. You have to forgive me. Just climbed this massive mountain here. And I gotta say, if you've never been there, I highly recommend coming because the views are spectacular. And when you're up here, it makes you realize that these little things like inflation, monetary supply don't matter. This is what really matters. So I appreciate you guys coming along for the ride with me. So what does this mean for you and your money? Well, we got to find out what happens next December 13th and see, has inflation come down? Because if it has, more than likely Powell will only raise rates by about 0.5. It would be amazing if it was 0.25, but the jobs numbers were stronger than expected. That was one of the reasons why we saw the markets pull back more this week, because they're worried that if jobs continue to be in demand, and if inflation doesn't pull back as much as they're hoping, that means Powell's going to keep raising rates. That means we could actually see a recession in the early part of 2023, and that would not be good for your money. But if inflation has in fact pulled back on December 14th, he'll probably announce a 0.5% rate increase. The markets will like that, and we'll see a good end of 2022. Remember, the NASDAQ is still in bear territory. The S&P 500 is still deep into correction territory. So we've already seen a pretty big pullback. And these naysayers who were saying, oh, another 20, another 30%, I tell you, there has not been a time ever in the history of reporting on markets that somebody wasn't out there telling you the stock market's about to fall by 20%. They're rarely ever right. Let's see what happens next week before we make the final call for 2022. Just like this lighthouse behind me is here to warn ships passing in the night of the dangers of the rocks, you check back every week with me for me to warn you about the dangers in the economy and in the stock market. So make sure you check back often. As always, thank you very much for watching. Check out some of my other videos. And if you haven't figured it out yet, I am in Iceland. I've had a wonderful time here, and I appreciate your support. Leave a comment down below, subscribe to the channel for future videos, and I'll see you next time.